4, 3, 2, 1, blast off, and welcome everyone. Really great to have you here at How to Foster a Cash Culture in Your Business. So I'm Steve Rosal with CFO.University. I've got a great panel here today to take on some great questions on how you can foster a great cash culture. But, why is it important to have a cash culture? So let's talk about that just for a second before we take a quick poll and introduce our panelists. A cash culture is fundamental to understanding a business. If you think about understanding how cash moves through a business, that tells you where, all the moving parts are working. All your transactions either begin or end in cash. And so when you think about that, following cash through the business is a great way to learn the business. In fact, I recommend to CFOs, the first thing they do when they get in a business is look at a cash flow forecast report and understand how cash is moving within the business. So that really helps you understand the business. It also will unlock cash. So fostering a cash culture will help you unlock more cash. And what is cash used for? Well, investments. So it'll free up cash for other investments, for other growth, for other activities. And it also will help you understand your cash capacity. So by understanding your cash capacity, same thing. You won't run into a situation where we don't have enough money for this, we don't have enough money for that. Or you'll know if some huge investment comes around, you'll know whether you have the availability in your bank lines, cash, everything else to be able to invest in that. So there's all kinds of reasons why cash culture is so important. And a cash culture relates very closely to a balance sheet mindset. Rather than a P&L mindset. So making sure you understand and have a strong balance sheet and the financial reserves. I'll just give you a short example before we take the poll. There's a company here in Oregon, they saw this opportunity to buy a bunch of inventory at cheap prices. So they bought all this inventory, but they didn't have a plan on how they were going to pay for it. And so they kind of ran out of cash. So they very quickly realized that they needed a cash culture to be able to turn around, their procurement people thought they were being rock stars. They were buying cheap inventory, yet they ran out of money. And so that was a whole big scramble they had to go through to kind of resurrect themselves. And that's the kind of things that having a cash culture will avoid. So with that, I want to take a quick poll and then we'll get to our panelists. So everyone, we have to go to the polls tab up in the other right corner to be able to vote. So click on that, make your vote. It'll take a couple seconds. And while you're doing that, I wanted to mention that in the lower right corner, you should be able to find a tab that allows you to get subtitles in other languages. If you want to just click on the, I think it says EN or something, or subtitles in the lower right corner, and you can get subtitles in your language. Unfortunately, I cannot see the whole poll there, so I can't. I think we still have enough of you. We can wait another 15 seconds, and then we'll kind of take a look at the poll results. So thank you all for participating. Appreciate that. You can see that the first two, lack of real-time data and resistance to change, are two of the key points on the poll. So we'll kind of come back to that and think about what that means. But first, I'm going to introduce our panelists. So we have with us today from beautiful Vancouver, Washington, Andrew Lee. So Andrew's the CFO of Realware, and I'll let Andrew introduce himself real quickly.
Yeah, thank you, Steve. Good morning, good afternoon, good evening, everyone. Joining from the beautiful Pacific Northwest. I've been with a company called Realware now for quite a while, six and a half years. We make a wearable computer. I should have had one here on me. It's a wearable computer with a little display about this big. It's only about 1/3 of an inch from corner to corner that kind of sits below the line of sight, and a camera that points out. And what that allows is sort of remote work or remote connectivity. So it's very rugged, meant to be used in, manufacturing environments. So if a piece of equipment goes down, somebody can wear our device, and the expert that would normally fix it on site can be, on the other side of the world and remote in and see what the person wearing our device is seeing and guide them through how to fix it. So that's one of many use cases. So we're primarily a hardware company, lots of software behind the device, but our sales and our revenue recognition is basically the hardware that we sell. We're a venture-backed company, kind of broad spectrum of strategic corporates that have invested in us, venture capital firms, family offices from around the world. And it's been a pretty fun ride, and excited to talk about our cash culture at RealWare.
Well, it's great to have you here. Timothy Clement is is in Lyon, France right now, and he represents Agicap. And tell us a little about yourself, Timothy.
Sure. Thank you, Steve, and nice to speak to all of you today. So my name is Timothy. I'm based currently in Lyon, where the HQ of Agicap is located. So Agicap is a cash flow management and cash flow forecasting tool. We will briefly touch on this topic today. So I look forward to the discussion. On my side, I have a background in strategy consulting at BCG, and I joined Agicap 3 years and a half ago to focus on international expansion. So I led our growth into Benelux, then UK from our London office, and more recently in the US.
Great. Well, thanks for joining us. And then we have from Framingham, Massachusetts, a suburb of Boston, Brian Jorgensen, who's the treasurer at Bose Corporation.
Thanks, Steve. Again, my name is Brian Jorgensen. We're outside of Boston. I work for Bose Corporation, and I've been with Bose for about 30 years, a little over 30 years now. I've been in Treasury for about 10 of the 30. And previous to Treasury and being part of the Treasury team here, I was in both operations and finance, some of our factories and some of our plants, as well as some of our product development organizations. Bose is a privately held company. We were founded in 1964 by Amar Bose. He was a professor at MIT. We are owned by MIT now. He gifted the company to MIT before he passed away in 2011. And as such, we don't have the luxury of going into debt, and we don't have the luxury of raising finances externally to the company. And so cash is very important to us, and creating a cash culture is very important to us. And really, we've been on a journey for really since I joined the Treasury team of, really focusing on our cash balances and just creating the culture within the company that enables everyone to be focused on cash generation, as opposed to, as Steve mentioned earlier, the P&L focus was a primary focus, years ago, and we really shifted that a number of years ago to a cash focus.
Great. Well, thank you three for joining us, and really let's jump right in. And I'll start with Brian. How did Bose Corporation maintain, how do you maintain a strong cash culture, and why is that important for you?
Yeah, sure, Steve. I mean, I just touched on it a minute ago. Our private ownership really requires us to be perhaps more focused than other companies on cash, just because it really is our lifeblood. And, getting our senior leadership team and our executives really aligned on cash generation as opposed to quote unquote profit generation is really pivotal. And so right from the top, getting our CEO interested in cash generation is important. And then just cascading the goals and metrics throughout the organization that are focused more on cash than profit. And so I think that it comes from, really senior leadership and senior leadership focus. And, I like to ask our executives, would you rather invest in working capital? Would you rather invest in a new R&D program or a new product development opportunity? And so inevitably it's, more focused on product development. And so really that's the motivation to focus on cash as opposed to, P&L.
Fantastic. Andrew, same question for you. How have you fostered a cash culture at RealWare, and what have been the main benefits?
Yeah, so I came from a very different company, a company called Rionet, which had no outside equity investment, we grew the business by managing working capital really well, line of credit, reinvesting our profits, which were not all that high. So it really required good discipline. And I think that's been a good foundation for me, because here at RealWare, we're a VC-backed company. And I think the tendency can be to be less disciplined with working capital and cash. You do a big raise, you have lots of cash, and it's like, what's the point of pinching pennies? You want to make sure you have plenty of inventory to sell. Mm-hmm. You don't want too tight of credit terms to get in the way of a new sale, et cetera. But the reality is it does matter. It's super important. If that inventory doesn't sell, it's no fun to write it off. If that customer you gave credit to can't pay, you're either going to write it off or take a return that's going to hit sales, and that's no fun. So, and you will need cash again, and it's too late to put in an S&OP or sales and operations planning process when you're already sitting on a bunch of the wrong inventory that you don't need. So good luck at that point. And good luck calling your customer that you gave net 90 terms to, when you're low on cash and you want them to pay in 30. It's like, you just look desperate at that point. So you set the rules and processes up from the beginning to be disciplined with your working capital, and you're going to create a strong financial business. So that's what we've tried to do at RealWare, even though, I think the natural tendency for VC-backed companies is not to do that.
Yeah. Well, I've known Andrew for quite a while, and I know that cash management is so important to you, and you've led that charge, wherever you've, led in the CFO role. Let's take a second and talk about the challenges in implementing a cash, a cash culture mindset. And, we talked about, the poll just said, lack of access to real-time cash data and resistance to change from the current mindset. Does that kind of fit in, Andrew and Brian, with what you found at your company, some of the struggles, or was it something different than that?
Yeah. I can go ahead. I can take that. I mean, when I came into the role as treasurer, we really didn't have a focus on cash. In fact, I would say it was almost quite the opposite. It was always, it's just Andrew said, we always wanted to make that last sale. And so it was a sin to run out of inventory. We had this mantra that we wanted to pay our suppliers as quickly as possible because we always thought we got the best price. And so, I'd be embarrassed to tell you what our DPO was. And so, when I came into the position as treasurer, we really didn't look at and focus on this. And so our first really initiative was just to look at the competitive landscape and see what our competitors were doing. And, it doesn't take too long to, turn over, really companies like Amazon and Microsoft and Apple. And, look, I sort of tell people here, the Holy Grail is to have an inverted cash conversion cycle. But we could look at those and just see where we stood relative to our benchmarks. And it was a sobering experience. And so, that was the start of the journey to kind of see and level set where we were, and then just look at the elements of your cash conversion between DPO, DIO, and DSO, and find out where you were competitive and where you weren't. And so, really starting to put metrics and goals in place around those three metrics to start driving improvement and get the management teams aligned to specific targets that we set. So, yeah, I mean, it was you've got to start someplace, and I think competitive benchmarking is a good place to start, and really understanding what the opportunity is, and you dollarize that too. When you dollarize the amount of money that you have tied up in working capital, it's a massive amount of money. And so, taking that and converting that to cash is very powerful, and setting goals around that is very effective.
Great points. Thank you for that. Andrew?
Yeah, I was gonna mention, especially again at a startup, there can be so much enthusiasm for a new product that you go crazy on things you shouldn't, like not pushing back on a vendor for the MOQ, just outright ordering too much, creating more products or starting more products in the pipeline than you really should be, and it's just really helpful to have like somebody in the room to push back on the enthusiasm and be the wet blanket. And like, if we're honest with ourselves as, CFOs / finance people, nobody else is going to do it. It has to be us to be that wet blanket. So, just, we've definitely made the errors, and in some ways that can be, you can use those errors as sort of a supporting case for, well, we're excited about the new product, but let's start out with a smaller initial order and help that, because remember, this case where we ended up with too much of it. So that kind of just like fighting that culture a little bit, or being that resistance to ensure you don't end up with too much bad inventory that you don't want, is helpful.
We celebrate knockouts now.
Yeah.
There you go. Yeah.
Good. Well, a couple things that I think about that is the cash literacy teaching. I think it's a responsibility for the CFO and the finance people to teach cash literacy. And what does that mean? It means, where does our cash go to? What, if we're using it in places that don't have high returns, how do we identify that for people? And then having kind of respect the cash piece. I think it's a result of having unlinked business departments where people aren't really talking with each other, understanding how their terms or their operations really affect cash. And then not having really good policies and procedures around things where people understand what the rules are and how they enforce the rules. So that has to do with customers and vendors, not just internally. And then I think also generally a lack of leadership. I think a poor cash culture is really the result of leadership. Timothy, I want to get to you real quick. And you guys are a cash flow or a cash software company, right? Cash management company.
Absolutely.
So we expect that you're going to have great cash culture. Tell us more about the cash culture at Agicap.
Sure, that's a good question, and that's also a hard question at the same time. Why? Because on the one hand, yes, we are a cash management software, cash forecasting software, so cash literacy, as you mentioned, is very high. All Agicap employees, especially in the customer-facing teams, so sales, customer success, support, they know deeply about the importance of cash in any business. They've been trained on this topic, and they are talking cash flow, working capital, optimization daily with their clients. So cash literacy is very strong. That's a strong enabler. However, it doesn't mean Agicap had, as a company, a super strong cash culture from the start. Why? Because as Andrew mentioned, we are also VC-backed. We've had a lot of large fundraising rounds. So in the beginning, especially in the first maybe 5 or 6 years of Agicap, revenue was king. It was all about getting new customers, getting them happy, and not necessarily looking too much about cash because we had sufficient cash in the bank. However, as you know, in about 2 years ago, the market conditions changed, and it quickly led to adjust the incentives, the strategy, and also the KPIs that were being monitored and reported to investors, because investors these days are not expecting exactly the same financial performances, actually not the same type of financial performances as before. And so, of course, cash efficiency is being much better rewarded today for good, of course, instead of growth at all costs. And so what might have been a brutal change in other companies, in other startups who struggle to make the move, has been very natural at Agicap. So thanks to this cash literacy, to the deep understanding of the topic shared by all teams, it's been very easy for everyone in sales, in customer success, and in other teams as well, to understand that cash generation was becoming as important as revenue generation for the business. So typically in the countries I've been launching for Agicap, UK and US, efficiency, cash generation was as important as the speed and the growth of the business, and probably setting very strong foundations for the future.
Yeah, great. Well, thank you for that. That's a great story, Timothy. Using your own tools to improve your cash literacy. That's great. Let's jump to some specific examples and how cash, a strong cash culture has improved financial performance. And we'll start with Andrew on this one.
Yeah. So a mentor of mine said, "Never waste a good crisis." So this isn't like not the path I would recommend necessarily, but we did take advantage of a time at Real where the company was in financial peril. And I would say we hadn't been all that disciplined with our cash. The company had underperformed. Our lender called their note with us, swept our cash. It was a truly awful time for the company and for me. But really, this brought everything into focus like no other experience I've ever had. So we had we were in a disaster, and we had to get out of it quickly or basically die. So during that time, every single expenditure was questioned. We implemented the S&OP process for really every inventory purchase decision of any size. Credit terms were tightened. We negotiated longer payment terms with our vendors. And kind of one by one, we started knocking out all of these threats. And it was really an incredible experience to see how a business that was sucking up really substantial cash could overnight or within about a month could just have a complete transformation. So, my advice, don't do it that way. Don't wait for the complete crisis. But maybe there's so set up disciplined practices no matter where the business is. But even if you don't have something so dramatic, hopefully you don't, use the little metrics to paint the picture of how it could be better. So, just improving from 5 turns to 6.5 turns would have this impact on our cash. Reducing DSO from 47 days to 41 days would increase our cash by this much. Like any little part of your business could be a mini crisis that you could sort of shine light on and, show the direct impact that could have on cash, and use that as a way to make a big change in the business.
Well, thanks for sharing that crisis story with us. It takes a great leader to get things through a crisis like that. And I was around a little bit. I didn't hear too much about it, but I knew enough about it that you certainly performed some heroics during that time. But nobody wants to go through that. So that's why we're here, right? We want to prevent that crisis.
Yeah, I don't recommend it.
Thanks for that example, Brian. How about on Ed Bowes?
Yeah, I would just say that, I said earlier that it's been a journey for us. And, I would just, encourage people that are embarking on a similar journey to, set goals and, look at your available tools. And so when we started this journey, we looked at, what are our levers? What can we do in different areas? We do business with the automotive industry, and they're pretty tough with payment terms. We also do business with, retail, customers like, Amazon and Media Saturn and Best Buy and companies like that. And so you can prioritize your customers and find out, where there's opportunities. You can look at, their DPO and DIO and DSO and just figure out, where you have some room to improve. And so set priorities and set objectives. We also implemented a supply chain finance program. And so, for those that aren't familiar with the supply chain finance program, it's really just taking advantage of the strength of your balance sheet and extending that to your supply base. And so, we were able to take, vendors with payment terms of say 60 days and move them to 90 days and demonstrate that that's a benefit because they're going to finance the 60 days. And then, if you can enable them to finance 90 days for less money than they could finance 60 days, that's a kind of a win-win. And so we got 90 days and the vendor was able to reduce their costs. And so you really need to look at your available tool set and find out, where you have opportunities. And then, as I said earlier, you have to dollarize that and make it, so that people really understand when they shave a day at DSO, that's about $10 million for Bose. And so there's not a sales leader in the company that doesn't know that every day of DSO is worth $10 million. And so they go after that very aggressively. And so it's the culture that you create so that everyone's sensitized to not booking the sale, but actually collecting the money. And so it's an important mind shift and mind change that really enables you to really reduce your overall cash conversion and generate cash for the company.
what's really interesting for both your responses is you guys have been very involved in the process, in the education process. So I think what are best practices when it comes to creating a cash culture is the finance leader, setting out to educate all those impacting cash in cash literacy. So the idea that the salespeople know it's $10 million a day for every day we don't collect, or every day we collect earlier, that's a huge incentive, right? So putting those numbers in the minds of whether it's your operations people on how quickly they build products, whether it's your procurement people on terms, it could be a receivable clerk who's responsible to call people, and maybe they're not being as diligent. They don't understand, well, if they're 5 days late, what's the big deal? And making sure they understand that that's all important. So I think CFOs and treasurers have such a important responsibility to make their companies cash literate. And I would look at it, some of the best practices have start with a capital plan. What I mean by a capital plan is understanding where your funding is going to come from for your growth. So understanding into certain scenarios. So, it starts from your business plan. You create a capital plan that understands if these things happen, here's how we're going to tap into our capital pool, what that's going to look like. And it might be a vendor financing program, like, pretty creative, like what Brian was talking about. It might be something else. But thinking about a capital plan and where that money is going to come from in the future is really important, and how those assets can be used. A 13-week cash flow report, cash forecast. There's no better way to learn the business. The cash conversion cycle, or your, what we call the cash velocity calculator, really helps people get their arms around the metrics that become tangible. Right. All of a sudden, those ideas, those concepts that they kind of understand, theoretically, but all of a sudden you see them on a piece of paper in your business, and now you can act on them. And then I think the idea of including metrics. So cash, KPIs and stuff around cash, super important. So thank you guys for that. I will give an example of a company in Idaho. It was an e-commerce manufacturer, and they weren't familiar. The leadership wasn't familiar with the cash conversion cycle. They were in all these silos, and they had inventory that was sitting there that wasn't being used. They weren't really collecting on their non-e-commerce. E-commerce was going great because they would fund right away, but anything that they build not in the e-commerce section kind of got lost in the wash. And then on the procurement side, they didn't really have a general attitude on how to charge vendors. So the vendors came back and that. Well, it took us about a month to get, once these very smart leaders, really good business people understood the whole picture, they went after it. In a month, these guys were cash flow experts, and they really improved the business, brought in, for a relatively small business, a couple $1 million of working capital they could use to invest in something else. So really, that cash literacy is super important. So if we go on to kind of some of the tools that we're using, in this area, Andrew, I know you had some collection tools that maybe you'd want to share or talk about, or anything else you want to talk about regarding the tools that you're using for really solid cash management.
Yeah, I think the collection side is kind of like the low-hanging fruit in terms of tools you can implement to make things better. So ours, it's inside of the ERP system. You set up it's a dunning system, right? So at invoice, there's at invoice, there's an auto email with the invoice. 7 days before it's due, there's a reminder. The day of, the email goes out. This is all automatically without any work. And then I think you can, ours you can set up however you want, but I think we do one more like 7 days after. And at that point, the auto part is done, and you want, a human getting involved in managing it in some way. But it's, almost no work to get most of those things going. And then having it in your ERP system is nice because there's visibility for everybody, not just the finance teams, but the sales teams as well. They can see the communications that have gone out and the communication that have come back. It's able to capture that inside the customer account. So that's I think there's a bunch of these tools out there. It's a fairly easy one to implement with a pretty good return if you can get some of those payments just happening automatically without a human having to get involved too much.
Was it an add-in to your ERP, or was it part of your ERP when you bought it and you just didn't turn the switch?
Yeah, in our case, it's an add-in. It's not something that our
Outside
ERP is strong in. So we had to go outside, but it integrates with the ERP. Okay.
And that selection process wasn't too difficult for you. It was
Not too difficult. We wanted, there were only, I think, like a couple options that had a good integration. And so for me, if the integration is good, like the tool itself can be not as good because the problems created by something that doesn't implement at all or doesn't implement well are going to be a lot worse than, the 10% of functionality where it might be lacking or something like that. But yeah, for us, it was fairly easy and it's worked well.
good. And Brian, kind of the same question for you on the tools that Bose uses to improve this area.
Sure, we're an SAP shop. We have a global single instance SAP, and I'm not a kind of a systems jock, but I do have a system jock that works on our team, and he's really proficient at getting information out of SAP, and so he uses Power BI and Snowflake to as a data repository. And over the last 3 years, we've just been focused on just generating, a whole arsenal of really good reports, and not a ton of reports, but just ones that really make a difference. And those go right to, our senior leadership team. And so, we do daily cash reporting. So every single day we get a snapshot of our cash. We have all of our cash investments. We have past due reporting. And so it details out all of the customers by responsible executive of money that we haven't collected as a result of just being past due. And so I would say that that's very, very powerful. No one really wants to be, and we have a name associated with it, so it's the customer and the executive's name associated with that. And so that's a very powerful tool. No one really wants to be on that report, and so we've had a lot of focus on there. I think we've shaved about 6 days off of our DSO just by looking at that. And so it's really amazing. If you really don't pay attention to that, the number of companies that will just, there'll be a day here, a day there, it adds up over time. And so, I think they'll keep doing it until you squeal. And so, we started squealing, and our sales executives were squealing. And so it really was powerful at helping us, improve our DSO. I touched a little bit on inventory. We have a mantra around here that we don't scrap cash and we don't pay people in inventory. And so, it's a different mindset of, we don't want to, the old mindset was we never, ever, ever wanted to miss a sale. And, I get it, but I'd rather not, the flip side of that is you're going to wind up discounting or promoting a product, and you're going to take it in the shorts on margin. And I'd much rather run out of a unit and not have to discount it. And so we've done a lot more of multicolor variants of our products, of short runs. We celebrate the stockouts. We move on to the next one. It creates, kind of buzz in the marketplace. But it was really the focus on inventory that drove a lot of those changes on the marketing side. And so, again, getting those daily reports out, getting people, some good visibility. We are a seasonal business, and so, it really has helped to drive down, the sort of the peaks in our inventory build cycle. And so really the focus on inventory has been powerful. And then lastly, DPO, we now publish the vendors that have really short payment terms with us. And, we buy a lot of semiconductors, and the semiconductors, they're just notorious, they just demand really short payment cycles. But, it's having visibility to that from the executives on down has helped engage them to work with their executive counterparts at companies like Qualcomm and Texas Instrument, and some of the semiconductor companies that have been notoriously hard to negotiate good payment terms on. And so we've forged better relationships at the top as a result of getting visibility to it, and it's helped us to improve our DPO with some of those vendors. So again, getting the visibility to it, getting daily reporting, getting credible reporting, it's all really important, and it's really helped us to create really a cash culture.
Well, I would also add that it's a huge mind shift change, because I would challenge anyone who celebrates a stock out in their business to give us a thumbs up in the chat, because I don't know, that's something I think is counterintuitive to a lot of the way many of us have been taught, and I think it's brilliant. So thank you for that. Timothy, tell us, where does Agicap fit into this whole system process for cash management technology?
Yeah, that's a good question, and I think I would first bounce off Andrew's remarks on their cash collection add-in. Andrew, you mentioned your ERP was not necessarily super strong at dunning itself. Agicap was created because accounting systems and ERPs are not necessarily built around cash flow. They are built around the P&L culture, the bookkeeping culture, looking a lot at transactions, looking a lot at historical data, less at cash itself. So cash KPIs are not always easy to analyze. That's why, Brian, you managed to maybe to customize your ERP in this direction quite well, but also through a lot of work. And they are not also designed to forecast easily in the future. So I'll share my screen to present a few elements. We would explain that Agicap is a complement, so an add-in to your main ledger or your main ERP system to precisely support cash culture, cash management, cash forecasting. So let's forget FP&A on the top right. We don't do FP&A, so there are specialized systems for this. You can do it in your ERP, on Excel, or on specialist solutions. Agicap really focuses on what is concerned with cash flow. So on the top left, cash flow management and cash flow forecasting. On the bottom left, AP automation, expense automation. And on the bottom right, AR automation, so similar as the tool for dunning that Andrew is using. You will connect one or multiple of those modules to your ERP, and of course also to your banks. The aim is to have a specialist system to handle anything related to cash flow in the day-to-day, but also in the future. Something that today leads a lot of companies, a lot of finance teams to still resort to Excel or to data that is not always available real time. So we aim to solve those two main challenges that we saw in the beginning of this session with the poll: having access to real-time data for cash flow by being connected to the bank accounts. We'll see that just after. And second, allowing collaboration across teams. So we'll see how Agicap enables to go across all teams, anyone that is concerned with cash flow. And usually, as we've seen today, it's almost everyone. So very briefly, how it works here, we focus on the cash flow management and cash flow forecasting part. You will be able to automate your 13-week cash flow plan and your long-term liquidity planning by first connecting to your banks. So you will have live bank feeds that are more powerful usually than in ERP. So of course, it depends on your ERP and how well it integrates with your bank. But we have a very strong ability to connect to any bank in the world through open banking, Swift, or automated file transfers. So having real-time visibility on the bank accounts. Second, we will connect to your ERP or accounting system to bring in all items that will bring transactions in the future. So payables, receivables, but also potentially purchase orders or quotes. Those will help automate a very detailed, very bottom-up, and also very automated 13-week cash flow forecast based on what is happening in the day-to-day, in the ERP, potentially even in the CRM that can also be connected. Finally, we will look also at long-term cash flow planning. So you can easily switch from day-to-day view, week-to-week view, or month-to-month view to also look at long-term liquidity planning when it comes to CapEx, dividend distributions, etc. So to have a holistic view of the cash flow with multiple sources of cash flow data integrated in the same place. So that's maybe the first main idea, giving access to real-time cash flow data at your fingertips. And second, supporting the cash culture because we support collaboration. So as discussed earlier, traditional cash management tools or ERPs or Excel most of the time are hardly suited to transcend the boundaries or the silos around cash flow. You have treasury, but you have all those other teams who are deeply involved in the cash culture, deeply involved in the cash efficiency of the business. We've discussed procurement, sales, accounting, and CFO and CEO, of course, will need this data at their fingertips to foster a cash culture. So if everything is in different spreadsheets or complex reports need to be generated to get this visibility, it can get really complicated. And that's where Agicap comes in and why it was designed, so to transcend those boundaries, transcend those silos, and enable strong collaboration. So I will not have time to touch on it. Typically, you will have dashboard that can be customized along the key KPIs, DSO, DPO, DIO, operating or investing cash flow, for example, what matters most for each business. So anyone in any relevant team can have real-time access to their cash performance.
Well, thanks for that, Timothy. That's great. That kind of takes care of the first question in the poll, which was one of the highest. And we have the other leaders. So we have the CFOs and the treasurers who address the second, which is the mindset change. So I think with the system and the right leadership, we can really make big strides in creating that cash culture. Before we take questions from the audience, I'd like to just follow up with one last question for both Andrew and Brian that has to do with, what's the long-term value of building a cash culture at your companies? Andrew, we'll start with you.
Yeah, so as a VC-backed company, our capital is expensive. For the most part, it's either debt that we probably don't want because of the terms, or it's raising new equity, and our investors don't really want to be diluted, especially if it can be avoided, right? So if we're looking at inventory that's higher than it should be, AR that's higher than it should be, AP that's lower than it should be, there may not be a lot of understanding from the board and our investors for why we need to do a raise. And to me, the balance sheet stuff is kind of the low-hanging fruit, where you're not having to trade off necessarily anything super valuable to get more cash. Like if you're trying to cut costs and reduce R&D, for example, you may have to do that, but there's an obvious consequence to that in not investing in R&D. So I'd rather just start with a balance sheet and get as much cash as you can out of that.
Perfect. Thank you. And Brian?
Yeah, I mean, for us, given our ownership structure, it's really imperative that we have a cash culture. And, the benefit of that is that, if you get a cash conversion of 0 or negative, think about the power that has in converting, the profit that you generate into cash. And so, free cash flow margin, it's really about generating cash so that you can reinvest that in the business, develop new products, and really just kind of perpetuate the flywheel mechanism to, grow your business. And it's extraordinarily powerful. And once you get your executives and once you get your operational folks aligned on that, and once they see the value, it's really just very powerful, and it really enables you to grow the business in a very economical way.
Great. Well, thank you for that. And I'll just kind of end before I ask Timothy one more question. Why is it? How do you maintain a cash culture over here? First, why do we need a cash culture? And it's not about saving money. And I think Andrew alluded to this. It's not about saving money or pinching pennies. It's really about return on capital, and it's about having the resources available to invest when you need it. And so that's what it's all about. That's what all this measurements is. It isn't about pitching pennies, and you may be in a dire situation, a crisis where that happens. But it's really more about understanding the return on the cash that you're using. And so evangelizing about, cash literacy is really important. Building processes to effectively, manage your cash process is important. Having systems in place that work. So it's really people, process, systems in the end. But understanding what your goal is. It's not necessarily, to save the bottom line on R&D. It's to utilize your capital and have it available for your future opportunities. So with that, I'll kind of ask one last question to Timothy before we get into questions. And that is, how does, cash management software like Agicap help people meet their long-term financial goals, help companies meet those long-term financial goals?
Sure. So you mentioned people, processes, and systems as three key pillars of this resilience. what we tend to see is that systems like Agicap will survive people when they leave a company, when they get fired, anything that can happen in the life of an organization. So you can see businesses that have built a very strong cash culture because you had strong leaders that distilled this cash culture around the company. The role of a solution like Agicap or others for cash flow is to bring this foundation, so this system foundation, to strengthen the cash culture in the future, because it will survive people who may change roles or change companies or retire. And for example, if you have a new CFO or a new treasurer coming in that maybe has less cash culture, more P&L oriented, or comes from a different mindset, they will still be able to quickly ramp up on those topics. So to quickly get up to speed with the cash culture of the company, with the processes in place, because the system is in place, the dashboards, the KPIs are in place. So they will, in a way, get into the cockpit of a plane that's already ready for what they have to achieve, even if they don't come from this background. So it's basically will strengthen their speed to value on the topic, and in this perspective, drastically improve the perspective of the cash culture staying strong in the future.
Great. Well, thank you for that, Timothy. And that kind of ends the presentation part of this. We want to leave a few minutes for participants to use the message board. And if you have any questions for these experts on, cash, cash literacy and creating a cash culture at your company, please take the time and we'll respond to any questions that you have. You can tell by their expertise that they know what they're talking about. They're living this every day. Certainly, Brian and Andrew have lived it as executives in their companies, and Timothy sees, not only within his company, but also, use the system side of things is super, super important to him. So if you have any questions, please put them out there. We want you to be, create a cash culture in your business. We think it's good for your career and it's good for your companies to have that cash culture. Got a shy crowd here. This is a great opportunity for you. Don't miss it out if you have something that you want to ask us. And we could have answered all your questions too, I guess. Did a good job on that. Let me check Richard. We'll start with Joe. Talked about how has technology facilitated cash management at your company? It's a good question. Do Andrew or Brian want to tackle that? You did. Andrew mentioned the receivable technology that you're using.
You want to take a go at it, Brian? Well, you kind of chatted about it too.
Yeah. And I guess I'm also just reading some of the comments here on the side, and there was one comment here that I think is worth just calling out. It's from Patty Source, and Patty works for a home builder, so they really don't have accounts receivable. They have, it sounds like it's a point of sale business, and that's a really excellent point, because we do have a web presence. Bose Corporation has a web presence. In fact, I've been, really an advocate for that business and growing that business, because we collect our money in 3 days, and so that is a really short DSO. And I'd rather collect full margin on our web sale than sell to someone like General Motors, who pays us in 55 or 60 days, and the margin's not nearly as good. And so that's a real opportunity to really be close to your business and really take an interest in looking for opportunities to grow a sales channel that has really good cash conversion and full margin. And so that's a great example of an opportunity to really improve cash conversion and cash flow.
Timothy, there's a question for you, but I want to get Bernard to ask a question real quickly. Who do you give access to cash? And to see cash. And I don't know if it's all about seeing cash. It's about understanding how cash moves. But how do you guys, who do you allow to see the cash in your business? Because you both made cash literate employees out of your team. And so wondering how you approach, who actually sees the cash in the bank.
Just so on my side, we look at cash every week with our executive team. And so that team, spans all the functions. And so you do have kind of representation from all the different levers you would want to pull, and kind of, making sure that those people understand that the impact they have on cash is super important. And then I was just going to mention, before you move on to Brian, in some of these, like AR and AP especially, it's like what are your terms? The question may come up, like just say the terms and don't be like squishy about it. So like if your desired DSO is 30 days, probably won't get to actually 30, but if you want to have net 30 terms as your standard for your customers, when somebody asks you, our terms are net 30, like that's it. Like our terms are net 30. And
we'd like to get net 30.
No but after that, right?
Yeah, there's no we'd like net 30 or do you think you could do net 30? That's just an invitation to negotiate. Our terms are net 30. And likewise, the same mindset on the payable side. If you're starting out with a new vendor and you want net 45, net 60, we pay our vendors net 60. Is this going to work for you? Like amongst the other things, it's just like these are our terms. So figure out if you're going to be okay with that. Otherwise, this may not work. Type of mindset.
Brian, do you have any comments on who sees cash at Bose?
Actually, that's an interesting point, because when we were owned by Amar Bose, I can count on this many people saw cash, and we've changed that. With our new ownership being MIT, we've changed that. We certainly don't publish that real broadly, but the executives that are really responsible for driving cash conversion definitely have visibility to cash. There was also a question from Patty here. I didn't answer the second half of her question. She asked about payables. And payables, we've kind of gone back and forth with payables, but we used to pay 2 and 3 times a week. And when in doubt, we pulled in. Now we pay once a week, which is Friday. And when in doubt, we push out. So I hate to say it, but the past due report that I mentioned on the sales side, where customers aren't paying us, we're probably doing the same thing to some of our vendors, but it's a bit of a game that you have to play, and you have to find out, who will accept that and who won't, and just manage it that way. But we do pay once a week. It's Friday, and when in doubt, we push out.
When in doubt, push out. Thank you. Timothy, there was a question back that Richard had asked, talking about maintaining visibility within the system. So how hard is it to maintain the daily employee momentum when you're, pushing this daily visibility on people all the time?
Sure, that's a good question. I think daily visibility is more for the finance team, the treasurer, or the CFO and the CEO. So they will have daily access. They will look at the cash situation, the cash outlook. We have a lot of companies that will, for example, schedule reports to the relevant people. So they will receive a cash situation, cash forecast that can be daily. But employees, if you look, for example, at the sales employees or the procurement employees, they do not necessarily need to see the cash picture daily. So they won't have a full access to the platform, contrary to the finance team. They will more be pushed with reports that can be once a week or once a month, to look at the cash performance of their department and potentially of the company as a whole. So they can get regular updates on how the company is performing cash-wise and how they are performing cash-wise as a department or as an individual. So a concrete example is within Agicap, our sales teams, our customer success teams have weekly updates on their cash performance as individual and also as a department and as a company. And this all comes from data analyzed and produced by Agicap.
Great. Well, thank you for that. I know Joe had asked a question in the Q&A, and I'll just, Andrew, you've talked about it already on AR. Brian, you've mentioned a few things, but is there any other technology you've used besides what you've talked about already to facilitate cash management at your companies?
You're talking specifically on the AR side?
No, I think cash management in general. He doesn't specifically mention AR. It says, how has technology facilitated cash management at your companies?
Yeah, I mean, we're really dependent on visibility and reporting. And so to the extent that you can get that, whether it's a tool like the one that Timothy's talking about here, or whether it's a homegrown tool, I think getting visibility to it and getting the executives plugged into that visibility is really important. We do use tools across the board. There's factoring programs, there's platform supply chain finance programs like Prime Revenue. Talia has a program. We've looked at all kinds of different programs where you can, it's all a balance sheet arbitrage, and you just look for opportunities where you can pull in DSO or push out DPO, and there's different tools across the board that can help you do that.
Great, thank you for that. Teresa agrees, not being squishy with stated terms. She agrees with you, Andrew. Patty, we have a speculative business model. Retirees.
Somebody asked the question, I can't remember. Oh, Patty, is there an ideal time to schedule vendor payments? I would just say no, just there's always more is better. Maybe that's one of the fun things about it. Like if your cash conversion cycle is 40 net or something, you can, get it down to 35 as your first goal, and then 30, and then like there's no limit. You can go negative. Some of the biggest companies in the world are negative, which is a really cool concept, because the faster you grow, actually, the more cash you're generating faster.
You can be unprofitable and grow, and you generate cash. In fact, Jeff Bezos is on record as saying, if you want to invest in a profitable company, don't invest in Amazon. But yet he was amassing piles of cash, right?
Yeah,
that's right.
Yeah. Well, that's great. Well, I think we're getting close to our time, so I'm going to call that off. But feel free to reach out if we didn't get to your questions. Feel to reach out to Agicap or myself. Andrew and Brian, not sure how available you guys are for that. But what I did want to do is Lisa in the I think in the doc section, Lisa's included a thing of the cash culture playbook, so you can download that. And then we're offering a free cash velocity calculator. It's our cash conversion calculator. It's pretty simple, but it's really insightful. And the code, but you need a promo code for ours. It's Agicap. So if you use Agicap when you go in to you can get it for free using Agicap. I'll put that in the chat, I guess. And really want to thank everyone for joining us, and Andrew and Brian for taking the time to share your expertise. That was great. And Timothy, this technology and the technology that Agicap has is really helping people create a cash culture in their businesses and making them understand the importance of that and facilitating that capability. So thank you all for joining us. And please reach out if you have any questions. Timothy, any closing comments?
No, I would say thank you, everyone. Thank you, Steve, for hosting us. And feel free to get in touch with Agicap if you want to learn more about the platforms. You can have a live online demonstration, usually 30 minutes to 45 minutes, where we will focus on your business, your industry, and your specific challenges to present the tool and explain how it can fit with your current systems and banks.
Thank you all very much. Andrew, Brian, any last words?
No, thank you. It's been great.
Really, yeah, it's a journey, and I wish everyone all the best, because you can really have a profound impact on your business by really engaging them in a cash culture.
Great. Thank you.
Thank you.
Bye-bye.
Bye.